This is very scary. So, is it all over? Could we really be headed for a stock market crash or a drop of 10%? Well, the charts say we could be headed there. And Goldman Sachs is telling us that there's four charts we want to watch for weak stock market returns ahead. All right, great start to the show, Justin. Well, as I just told you, the S&P is at risk of going down. We have an engulfing candle for the Nasdaq as well, and it's nearly a bearish engulfing area. We're going to go through and look at these notes a little bit later, but we have a neutral bias and a bearish tilt. This is really important because we've talked about how we're overdue for a 10% correction. I'm showing you 11%. Here it says 10. We're overdue. But if it's 1995, this beach ball is going to remain above water. What is that? It's 565. It's a really important area. Please watch out. Why? Because it's also our monthly area. So what you might be wondering what to do, because that's exactly why today's video is a little bit later this week, because we got Jerome on Thursday. But first, we have the election. Oh my goodness, it's going to be a big week. In September, Goldman Sachs told us that we're heading for 6,000 by the end of the year after some bumps. But what's really important is whether this is 1999, where we go down by 50%, or is this 1995, where we're going for smooth sailings ahead, hundreds of percent higher? What is this? Why does this matter? Well, again, when you're on the airplane, before you crash, you get some bumps. So if we're going in for a soft landing, that would be 1995. We're seeing a couple of bumps right now. Those are the charts. But we get bumps as we're going down into a bear market too. So please note, it's really important whether we are in a bear market or if we're in a bull market. All right, what does all this stuff mean? Let's get through it now. Please make sure you watch all the way into the end, because I will leave you with clear takeaways for now and after the election. Earnings are more important than the election. So the charts are breaking after we got earnings, but now the election's coming in. So if that was really important, could this give it the follow through to really come down? For the last 2 weeks, we got 2 weak candles. We got lower lows, lower highs, and 2 full candles. That's not the sign of a recipe that I want. Looking here at the monthly chart too, well, failed breakout, and we're right here on support. We drop by 1%. Boom, monthly lower low. We start to get our bear recipe. That's ingredient number 1. We go to 2, 3, 4. That's it. The bear's won. So we really want to make sure we avoid doing those things. And Goldman Sachs is making a pretty compelling case here when we look through these charts. I'm not sure I'll have time to go through it today, but I'll make an effort to go through it this week. So make sure you subscribe if you want to see all that. All right, what worries me? Everything. Officials brace for U.S. election day. Great. Traders prepare for a long, volatile election night. All right, you're going to be caffeinated. Why? You got to be up all night. And we know that we want to buy the hype, sell the news. But is this time different? Do we sell the hype, buy the news? Well, that's exactly what the VIX says. It says the VIX around election day usually peaks, and then it drops off after the fact, which means stocks should go higher if there's no contested election. And we all get this wrapped up on Tuesday night. Pause the video if you want to see what's happening here between different policies. Here we have Kamala on the left and Donald on the right. There you go. The number one thing for people, though, is it comes down to inflation, healthcare, needs for middle classes, crime, and social security. So if we think about inflation specifically, which is what 8 out of 10 people are worried about, both administrations would be highly inflationary. Why? Man, look at this. 2023 national defense spending. This does not include interest payments either. It's nearly $1 trillion. It's the equivalent of 9 other countries combined. The U.S. might be spending its way right to its funeral. At the same time, the U.S. is also trying to contain China's tech push. Is it faltering, though? Well, this will be a very important test for the bulls, because Wall Street's nonstop rallies minted a new class of hardcore bulls. All right, can't even say that word. Hardcore. All right, full tilt, full time. There we go. Right now we're back here into neutral, almost right back to the middle. A week ago, a month ago, we were greedy, and a year ago, we were fearful. So what do? We went from fear. Now we've bounced back here to neutral. Please remember, if these hardcore Wall Street bulls are really going to drive us higher, there should be a bounce, because we didn't make it down to 50 last time. This was the sustained rally that we held, eventually fading, but the market was okay. This is a pretty hard crash here. We better make sure we hold on here. All right, stop the show, because you told me it was all about earnings. That's right, Jerome, it's all about earnings. But just before we go further, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up or subscribing to the channel. Thank you ahead of time. So if we look here, what matters? Well, we talked about earnings. Now let's get a quick update on that. Well, this week we got earnings, and there's some stocks up here, but I don't think a lot of them really matter. We'll have a quick look at Palantir, because I think that's a stock a lot of people track. All right, in line. I want to see what their reaction is. If earnings are in line after its massive run up, could be due for a bit of a haircut. Let's watch for that one. And right now, the Magnificent Seven have tumbled. They're not doing so hot, right? They're not so magnificent right now. They're actually sliding. Samsung shows us that it's really important not to be sleeping on AI. Cost them $122 billion. That's a lot. We look here to growth for cloud. It's actually Google, right? Google appears to be winning. Why? They're growing the most. They got the highest growth right now. Excellent. So now we're going to shift gears to NVIDIA because this is the new king of Wall Street. NVIDIA earnings may bring good news. 45% of investors thought that this could drive the stock higher. 28% thought it would have little impact, and 27% thought it could cause a decline. NVIDIA did briefly overtake Apple to become the most valuable company in the world. And right now, we got a boost going into Friday of 3%, which will likely get it right to or near that most valuable company title because they're kicking out Intel from the Dow Jones and they're being included. So, right, that's worth about $10 billion, right? 3% on a $3.3 trillion company. Oh boy, right? That's a really big bump. Sorry, $100 billion. Oh my goodness, $100 billion. Over here, we got SoftBank Masayoshi telling us that NVIDIA is undervalued, so low, right? Need to go so high. That's right. And remember, if we're early into this bull market, there should be steam left in the tank for the bulls, which means these charts should not break. Or if they break, it should be temporary. If we print a lower low, we should not close below the low. That's what we did over here back in August. We had a massive lower low, but snapped back to form a failed breakdown. Really simple pattern, but a powerful one. So into the end of the year, we should see more gains 80% of the time. And this chart here tells us that 82.6% of the time. So if volatility dampens or damps, that means that stonks should go up. And Jerome Powell might look like the best banker in the world. So is the job really done? Is it really time for us to have that soft landing where now we don't have to worry? Well, there's always things to worry about. Goldman Sachs is giving us a fresh list here. So let's just do one thing. Let's make it really simple. What do you want to do? Thank you for watching all the way until now, by the way. So you might be wondering, what do I do? I've been getting this question over and over, right? Should I buy stonks right now? Well, they just started getting on sale. They just started showing weakness. How do I fix the chart? By closing out a weekly candle all the way until Friday, which would be after the election, after Powell. So when do you want to buy? Well, if this is going to be a buy the hype, buy after the news, it'll be like 2000. What do? You buy after the election night. Up. Went up for a very long time here. So don't buy before. You want to buy either on sale, I think as much as 10%, or you want to buy it at the close of the week after things have been de-risked. Because do you really know where you bought it here in 2000? You're like, oh my God, I didn't buy the exact bottom. Well, could have bought there, could have bought there, could have bought there. Still would have done very well by the time you got to the all-time high here. So that's it. If we do lose 565, we have to also wait until the end of the month to prove that we're not going into number two. We close number two, it gets increasingly easier to go to 3 and 4, which means we know exactly what to watch for to know there's bearish momentum. With that said, if you want to follow along, maybe you want to subscribe to the channel, come hang out with me at 9:15 and 9:30 a.m. on Monday. Thanks so much.